Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate reports into something you can actually understand. Today we are diving into Energizer Holdings, the battery and auto care giant. We'll see if their latest quarterly report is fully charged, are running low on juice. Spoiler alert, it's a bit of both. If you appreciate getting the straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come check it out and let's discuss Energizer. This is Energizer's 10Q filing, which gives us a peek into how they performed in the first part of 2025, specifically for the months of January, February, and March. This report gives investors an update on Energizer's business and how they are doing money-wise. First, some basics. As of the start of May 2025, Energizer had a little over 72 million shares of common stock outstanding or out in the market. That's the number to keep in mind when calculating how much each share is worth. Let's get right into the numbers. We'll start with the consolidated statements of earnings, which in simple words tells us how much money the company made or lost. We'll start with net sales. Their sales come in at $662.9 million for the quarter that ended in March 2025, almost exactly the same as last year. That's basically flat, which isn't terrible, but it's not great either. It means they are pretty much where they were last year in revenue. Next, let's see cost of products sold, basically how much it costs Energizer to make their stuff. That's at $403.9 million for the recent quarter. Last year, it was $410 million, so that's great as that number goes down. This translates to a slightly better gross profit, which is revenue less those costs. This means there is a little more money to cover other business expenses. Now we look at the expenses. We'll start with selling, general, and administrative expenses, also known as SG&A. This is where things get interesting. It was $132 and $113.250 when called versus $122 and $500, $122.5 million last year. This is a pretty significant increase and would normally raise a lot of questions. We can see interest expense sits at around $38 million for both this year and last. One area that is worth noting is the loss on extinguishment or modification of debt. This is essentially the cost of restructuring their loans. It was $5.2 million this quarter compared to only $0.4 million last year, meaning that they are spending on this front. This all leads us to basic net earnings per common share, which is the profit per share. It sits at $0.39 versus $9 on $1.445 last year. So while revenues are flat, costs are higher, therefore profit goes down per share. That's a 16% decrease, meaning for every 100 shares you own, your profit goes down 16 shares this quarter. Now let's look at the balance sheets. The balance sheet tells us what the company owns and what it owes. First, we see cash and cash equivalents. This represents their available funds. At the end of March 2025, it was $139.3 million, down quite a bit from $216.9 million back in September of last year. This suggests they are spending their cash, whether on investments, paying off debt, or something else. Then we have trade receivables, which is the money owed to them at $305.1 million. It is a lot lower than the $441.3 million back in September. This could be great, indicating that customers are paying them faster, but we will see more details on that. Next is inventories, which is the value of all the products they need to sell. At $748.6 million, it has gone up from 657 twine. Third means is they have quite a bit of product that they need to shift. If we skip to total assets, it's at $4,211.9 million at the end of March compared to $4,342 $4.4 million than it did 6 months ago. If we scroll to total liabilities, it's at $4,078 million, which is about $130 million lower than September of last year. This indicates that they are paying down debts and other obligations. Their long-term debt specifically has gone down from $3,193 million to $3,154.8 million. Again, good, but these numbers could change depending on currency values in foreign loans. And to finish with the assets and liabilities, if we look at total shareholders' equity or how much the company is worth to shareholders, it is pretty much the same. Next, we can see the consolidated statements of cash flows, which helps explain how the company is making and spending cash. The first line is net earnings, which, as we saw earlier, is $50.6 million. It's important to remember that this isn't necessarily actual cash flow because it includes a lot of non-cash accounting. To see that actual flow, we need to adjust for those numbers. If we adjust for things like depreciation and amortization that aren't actually cash, we are on our way. To cut to the chase, net cash from operating activities. So after all the adjustments, they get $64.2 million, which is pretty low, especially when you compare it to the $249 million they got last year. It means the business is doing a worse job of turning sales into actual cash compared to last year. Next, we go to cash used by investing activities. It has to do with things that will help in the long term. We see capital expenditures. Basically, the money spent on property, plant, and equipment at $55.66 million. Very close to the year before at $52 million. Net cash used by investing activities tallies at $55.7 million. We finally arrive at cash flow from financing activities. It has to do with how the company raises money. We see they issued debt or borrowed with maturities greater than 90 days or longer term. They issued about one-time debts of $220.7 million, but paid off long-term debts of $220.7. They continued to pay out $45.3 million in dividends, the same 30 cents per share as usual. All of this leads to the company spent a total of $81.7 million on financing activities. Adding that all together, their cash went down by $77.6 million during the last 6 months. This leaves them with $139.3 million in cash as they close the period. Next, we come to the consolidated statements of shareholders' equity. This statement just shows how equity of the company is doing, basically tracking shares coming in and out of the company. There aren't any super interesting or material significant changes to point out here. The filing includes some new accounting rules. These are basically guidelines and changes to how accountants account for everything. It is unlikely that these will impact us too much, so we can skim. Here we find more details about revenue. Battery sales are the bulk of their business, pulling in about $470 rollage, followed by their auto care sector at $174.9 million. Light segment is a fraction of their total revenue. North America is still their biggest source of income. A few acquisitions were completed. Notably, the share purchase agreement included a contractual purchase price of approximately 15. The Belgium acquisition had some legal and diligence fees associated, but again, these seem to be minor. Next, Project Momentum restructuring program has a lot of associated costs. Since it is mostly an internal effort, we can skip. Here we get into segments again. The same numbers and trend are present here. This is mostly a breakdown of the numbers we have seen above, so we'll skip it. Next, debt. Their long-term debt is significant, sitting at $3,154.8 million. The big chunk of debt is the senior secured term loan facility and senior notes. Good to know what to watch out for. We also get a picture of when the debts are due, and they are spread out over the years. It's also worth mentioning that one of the liabilities is finance lease obligations. Next is supply chain financing. It has to do with a program that they use to pay suppliers. They have over $50 million of obligations outstanding under this program. The company sponsors or participates in a number of pension plans, and they have a bit of financial information about that. We'll keep moving since the total effect isn't huge. Next is risk management. Most interesting thing we get from here is that they use financial derivatives to reduce their exposure to market fluctuations. These help them avoid big losses or gains from currency or commodity price swings. ACRO is a weird spot where accounting ends up. At March 31, 2025, it sits at SEC Ed R19498 million compared to last year. If you want to become a financial analyst, you can learn about this stuff. For this channel, not that important. A few other liabilities are discussed here, but all within normal range. Finally, legal proceedings. 3 class action lawsuits alleging that Energizer and Walmart conspired to inflate battery prices. The company hasn't recorded any accruals in its consolidated financial statements, as the likelihood of a loss from these cases is not probable nor estimable at this time. That's an important note. There is always risk to these legal battles, but at the moment, Energizer doesn't think the suits are very credible. It's time to look at the risk factors facing Energizer, or problems the company is worried about. Here we see that changes in the global economy and competition can hinder their ability to make money. Changes in consumer preferences or harm to the company's reputation is also mentioned. Additionally, tariffs and currency fluctuations is something that can also reduce profits. So the company is dependent on keeping the economy and global relationships smooth. Now, looking at these results more broadly, Energizer seems to be maintaining its position but facing some headwinds. Sales are about flat, but expenses are up, squeezing profits. It's not a dire situation. They are paying money to restructure their debts, and they are also battling at least one large lawsuit. But it's worth watching to see how these are solved or if they get worse. Alright, that's our breakdown of Energizer's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.